This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ Tax.
Great. So I guess if I were to look at it, there's a continuum between wealth creation and wealth preservation. And there are people who, wherever they are in their personal financial journey, they're on the side of wealth creation, and there are those who are on this moving towards wealth preservation. You wherever you are in the continuum. Now, within the last few months, I think I've spoken to more newly minted millionaires than any other time in my professional history. Thanks, obviously, to crypto, but also, the people have invested in other things, particularly technology-related businesses, and have done particularly well. And it seems counterintuitive given what we're going through right now with this pandemic. But there are people that are coming out on the right side. I think it was last week. It felt almost like a joke. It's like every single day I'm jumping on Zoom with somebody who's saying, you know what, I'm sitting on 1 point whatever, 3, 5, 9, 18, $25 million of gains. And they're talking to people to try to get to explore options. How am I going to deal with this? They're walking away from fantastic jobs, high 6-figure jobs, because this momentum is really working in their favor. And they're thinking, okay, how can I protect what I've earned? I mean, obviously take it off the table and diversify and whatever, but they're looking at different options geographically in terms of jurisdictions. Now, I think there's the obvious stuff, kind of like, there's a lot of press coverage on Cal exit, for example, people leaving California to go to Texas or Tennessee, or people leaving New York to go to Florida. But outside of the US context, even within the US context and outside of the US context, people are looking at different jurisdictions in a more meaningful way than before, and I'll perhaps explain why later on. So let me share my screen. I just have a few slides that kind of capture some of the ideas that have been bouncing around in my head as I see things unfolding. All right, yeah. So you have to quote the man. You can't have this conversation without acknowledging. So, right, to begin the conversation on diversification, but again, yes, we think about asset classes, but I want to promote the idea. I want to suggest, I want to plant a seed in your mind. Even though this doesn't make sense today, the seed will be there. And at some point in time, it may manifest in a more meaningful way for you. So the idea is no single country is perfect. And we know that. A country might be good for banking or might be good for certain types of businesses, but tax-wise, it may not be the most tax efficient in terms of the quality of life that you're looking for. It may not be giving you what you're looking for. But, so no one country is perfect. So the idea is to create a portfolio of residencies and citizenships that expose you to the qualities that you're looking for. So this obviously is nothing new. There's a guy, when you explore not the literature, but the debate or the discussion around this, invariably you get hit with something called flag theory. And now I know that for those of you who are based in Singapore or Malaysia and in certain European countries, there are businesses that have borrowed that name and incorporated using that brand name. But as far as the law or legend has it, that the term was developed I think in 1930s and 1940s or whatever, by this guy called Harry Schultz. And he used it to describe, he came up with 3 flags. So the one on the left, when you're looking at it on your left. So he started off discussing three flags, but to me, it isn't meant to be prescriptive. The principle is that you don't have all your eggs in one basket, that you pick jurisdictions that work in your favor, depending on what you're trying to achieve, and you plant a flag in each of those. So the most recent iteration or incarnation of this has been what you see on the right, where it has evolved from 3 to 7 flags. But it doesn't have to be that. So, but at the very least, when people are having this type of conversation, it will be, wherever you're born. So that's your citizenship. But it may not be where you're resident. Depending, and again, this, I'm reminding you that this perhaps makes more sense for people who are on the wealth preservation side of their financial journey, as opposed to the wealth creation side. So you on the wealth preservation side, you may be able to run whatever business you have remotely, or you have investments in different jurisdictions. In that sense, you want to be somewhere that offers residency taxation, residence-based taxation, so like Singapore, Malaysia, Hong Kong, where you only tax the income arising from within those jurisdictions. Then that is a sharp contrast to your US, Canada, Australia, New Zealand, most of the EU, where ordinarily, there are exceptions, I know, but ordinarily, once you're a tax resident in the average OECD nation, or the average wealthy nation, you will be subject to tax on your worldwide income. But there are jurisdictions that allow you to legally avoid that. And if you pick really well, you can legally avoid capital gains tax, as you can in Singapore and Hong Kong and Malaysia. In terms of offshore company formation, again, this is a function of the nature of your business or whatever, but there's some jurisdictions that make it quite easy, and they give you attractive options in terms of company formation, in terms of banking. For those of you who have done business in different countries, it's not necessarily company formation, but banks can be a real headache. And banking, especially if you are having to do business in jurisdictions with exchange rate controls, such as Indonesia or in the Caribbean. I think I mentioned Barbados recently, and so on and so forth. And of course, moving up to the 7th flag, I wouldn't bother to go through each of them because they're self-explanatory. They're digital assets. And in terms of, for those who are especially into crypto, there are some jurisdictions that are more accommodating than others. I mean, you may think of, well, yeah, Singapore doesn't have capital gains tax, but depending on how it is you manage your crypto, and I have clients that, yes, they buy and hold, but I have clients that are active traders, and what is perhaps not well understood is that the tax rules are different. So if it is that you are deemed to be by the tax authority to be a trader rather than an investor, that's a different conversation. So it's no longer tax-free in Singapore, or a crypto haven like Portugal. A lot of people flock to Portugal with that promise, but yes, it's crypto friendly. But if you're a trader, you're going to be taxed. It's going to be subject to Portugal corporate tax. And like most of Europe, corporate tax is not very low. So moving on, black swan events. For those, I mean, it's hard to imagine, but within the not so distant past, the marginal tax rate in the United States was pretty high. It went up to 94%, 75% was the average for quite a considerable period of time during the Great Depression, going into the war period, and so on. And of course, well, the idea of gold confiscation, that is, I'm sure everyone is familiar with that, because as people move to the safety of crypto and precious metals, one of the sales pitch that you would hear commonly used is the reality that it is plausible for the government to pass certain rules to make ownership or control of certain certain asset classes difficult, if not illegal. And I think within the chat group, there was some recent discussion over what's going on in India, for example, crypto, and other jurisdictions as well, including China. And as jurisdictions, for whatever geopolitical or economic reasons, they either outlaw crypto or they would prefer that their citizens or their residents use their own crypto, as in crypto that has been issued and authorized by their central banks. And yeah, the pandemic, how many people were really caught out. I remember when it first hit, it was hundreds of thousands of people were locked out of Australia when Australia closed the borders. Or for me personally, I was on a 3-day trip to Indonesia for business, and then suddenly Singapore closed and I could not get back in. Now, that has implications to access to wealth. Fortunately, Singapore understands that it's a wealth haven. So even in the midst of the lockdown, those engaged in financial services were deemed an essential service. So, those who work in the big gold vaults under Changi and the wealth management businesses and whatever, they were allowed to continue, which is a good thing. But not every jurisdiction was as forward thinking and progressive as Singapore. So some people were caught out. So I'll stop there, because basically I think we get the idea. Again, for those who may be at the stage in their personal financial journey where they're still on wealth acquisition or growing their wealth, perhaps not quite yet, but still the seed has been planted. Put it in the back of your mind and pick it up and run with it later on when it perhaps makes sense. But for those who are at the stage where, I'm sitting on a decent nest egg and I want to try and figure out, okay, how can I manage this? How can I preserve? How can I defend this in a way that works for me and a way that works for my family? And I cannot think, and I'm sure you guys would agree with me, it's hard to think of any country right now that is not looking at increasing taxes as a way to plug the hole created by the recent economic and health challenges. That's just very real. And for those in the US, of course, certain states are looking at a wealth tax, as is the UK. I think the UK is looking at a one-off wealth tax. And things like that. If it is you on a salary, that's one thing. But if you've worked hard, you've invested well, and you're sitting on a nest egg, the idea of your wealth being double taxed, or perhaps like in the case of those countries that do have a wealth tax going, like Spain, it's your wealth is being continuously eroded by not just inflation, but by a wealth tax every year. And once upon a time, that was far-fetched, but now not so much, because governments are really desperate. There are holes in their balance sheets that need to be plugged. So that's where we are. Any thoughts, any questions?
Hey, Darren.
Hey.
Hi. I guess the biggest questions always relates to taxes. I guess specifically in regards to where you have your assets, where your domicile, and potentially what are the tax implications for having wealth distributed in many different countries. So I'll let you comment on this, but I suspect it's based on where your tax residency is defined as to how you would then have to declare potential gains, realized or unrealized, in the various jurisdictions. If you could comment a little bit more on that.
Yeah, so it is a real Pandora's box in that different countries, different jurisdictions look at things differently. So for example, if you are deemed to be domicile, and domicile again is a concept that's not normally defined by any tax code, but it's more or less found, it's more or less better understood using case law. So we've relied on the courts to help us understand what domicile means, but just keeping it very top line and very, very simple. It's more like a concept around intent. So where is it, do you have your closer connections? Where's your center of life? Where do you intend to retire and pass away after even though you're working as an expat, you're traveling all over the world, but where is it you truly consider to be your home? Where's your heart? You know, again, it seems to be quite abstract, but that's essentially what it is. And depending on the jurisdiction that you're exposed to, for example, the US or the UK, you have, I mean, to put it crudely, you have death taxes, um, you have inheritance taxes, you have estate taxes to consider, and that has implications as you try to accumulate wealth, because for many of us who have families, this is about the kids, this is about creating a springboard for the next generation. And even if you're not thinking that far ahead, in the case of the US, just as an example, or even, again, in the UK, because I guess being a former British colony-ish, the laws are not too dissimilar. Even by giving a gift, it could be, it can have tax implications. So, and depending on how you hold whatever your investments may be, you may be taxed on unrealized gains, depending on which jurisdictions you may or may not be intentionally, unintentionally connected with. So I guess stepping back from, from the minutia of domicile and the various taxes that may apply, I think more so than before, we have an opportunity in that, these tools were the preserve of, let's say, the 1% or the elite. They always had the ability to pick the jurisdictions that work in their interest. And that's just the way it's always been. Now, because of the various residency programs and citizenship by investment programs, now it's opened up to people of, let's say, more modest means, from high 6 to 7 and 8 figures. Anyone can basically, assuming that you are at the stage where you're not really required to be in a specific location for your job, you can create a situation where you declare residence or even declare domicile in a jurisdiction that works for you. And again, one size doesn't fit all. It really depends on you. So what I would suggest anybody do is think about, well, what are your objectives, personal and business wise? What it is you're really trying to achieve. And again, I know this is for those who are at the stage where, okay, I am a newly minted millionaire. I am sitting on 10, 20, $30 million of investable assets. And yeah, okay, so I like where I am. I want to keep hold of it. And then you do some sort of risk assessment. Okay, given my present situation, I am a Canadian citizen and I'm sitting in Toronto. What are the implications of that from a tax perspective? Obviously, Canada, is one of those jurisdictions. They'll tax you on your worldwide income. Taxes are pretty high. Am I comfortable with that? Maybe I am. Maybe that's okay. Or maybe I'm not. Maybe I want to explore my options. And if it is that you see that, okay, I want to explore options that allow me to more tax efficiently invest in a certain asset class, or to more easily pass wealth on to my children, or whatever the case may be, then you have a gap that you need to be filled. And you can sit with whomever, you can Google. To be fair, everything is freely available online. Nothing is a secret anymore. And you can identify jurisdictions that you are interested in, that you wouldn't mind spending time in, you wouldn't mind setting up shop in, and see whether they work in your favor and they give you what you intend to achieve. So what people do with me is that they would have been doing that. They're sitting on a certain number of certain quantum of assets, and they're no longer tied to a job. You know, I'm seeing people right now walking out of some really well-paid jobs by choice because they are doing so well with their investments. So they've achieved the freedom that they want. They have looked around the world, they've spent time looking at YouTube videos or whatever, and they've narrowed it down to some jurisdictions that they enjoy spending time in. So that's for them personally. So now they'll come to someone like me or whoever and ask the question, well, okay, this is my situation, this is who I am. And these are my objectives. I want to continue growing these different asset classes as they are right now. And I want to enjoy sunshine, or I enjoy skiing, winter sports, whatever the case may be. And I've been traveling a bit, and I've been looking at YouTube videos, and these are the jurisdictions that interest me. Now, given my interest and given my objectives, you know, what are your thoughts? Would they help me? Am I heading in the right direction? So that's it essentially. And then take action.
Okay. I know one of the challenges about opening up a financial account in any global jurisdiction is I think it's somewhat defined by your residency at the time. You know, it's very difficult for someone to come into Singapore and just naturally open up a bank account. You know, there's specific requirements, and I'm pretty sure that's applicable to different countries around the world. What are some of the options that are available to make it easier for, number one, to open up at minimum a bank account, potentially a brokerage account, a trading account, even though you're not considered a permanent residence in that jurisdiction?
That's a good question. So because, as everyone is aware, you know, for the past decade or two, I think most people have lost track of the number of scandals, you know, their Panama Papers and their Paradise Papers and the whatever. So banks have been drawn in, sometimes unfairly, to be honest with you, and being accused of money laundering and facilitating tax evasion and stuff like that. So the banks are on the back foot, and they've been thrown in the deep end in terms of regulation. Most jurisdictions themselves have been more heavily regulating banks. And on top of that, you have at the OECD level, or at least at the international level, you have agreements like FATCA, the Financial Account Tax Compliance Act, or the Automatic Exchange of Information, or the Common Reporting Standard. And so what all these do is conspire to just give banks a hard time. So it's not, so, you know, everybody has problems, and it's not personal. It's just the environment in which we now function. What do you do? And that's where having the portfolio comes in. So yes, landing in Singapore and asking to open a bank account, the bank will be raising an eyebrow like, why Singapore? I mean, they do it. I mean, don't get me wrong, they will take, but the minimum balance is going to be on the higher side. And the onboarding process is going to be more rigorous, as opposed to someone who's a legal resident of Singapore or the UK or whatever the case may be. And that's where having the portfolio comes in. So because you don't expect that, those of us who believe that the cycle of lockdown and reopening, it's not going to stop anytime soon. If you look at, and let's take, again, I want to put this in a slightly historical perspective. So I have a client who is Italian American, and, you know, he's big into his family tree and his family history and stuff like that. So him and his family, they traced back to that first relative that arrived at Ellis Island and entered New York and then the US. So back in those days, so this is the late 1800s, you just basically rock up to Ellis Island. You don't even need an identity document. You identify yourself, and you get some sort of basic medical test, and it's welcome to the United States, and you're in. Now, fast forward a couple of decades, it was, well, we need to see some sort of identity document, something that identifies yourself. And then fast forward a few decades, you have the concept of a passport. to facilitate international travel. It's relatively new. And then fast forward a little bit, then you have visas. So my point is that barriers to international travel have been getting increasingly difficult. Now we're at a stage where, if you look at it right now globally, the whole visa system has been thrown out the window. You know, people who thought they had a powerful passport and that it allowed them to enter X number of countries visa free, that's all gone. You know, some people have been joking that a US passport or a British passport is on par with certain African passports, in that you can not really go to that many places because of the whole lockdown. Now, jurisdictions are reopening, like to some extent, Singapore is reopened, but they're not opening to the level of permission needed to enter and you know, the pre-qualification or whatever. So basically, non-essential travel, non-essential travel, it's unlikely that that's going to return anytime soon. And for those who believe that economic nationalism is growing, you know, we have the territory, we had President Trump, we have Brexit, we have, you know, what's going on in Australia and whatever. So that this is a trend and it's global. So I'm creating all that to explain what I see happening with banking as well. So you have regulation, and then you have difficulty in movement. So in order, when lockdowns happened, as lockdowns are happening right now, the probability or the likelihood of you being allowed in a jurisdiction increases if you are a lawful permanent resident of that jurisdiction, or if you're a citizen. So my perspective is that you cannot divorce banking from residency. So if it is that you have assessed, you know, you're looking at flag theory or whatever, you want to diversify yourself, or you may be in a jurisdiction where banking is not as stable. So when you look at a list of the strongest banks in the world, or strongest financial institution, you're in a jurisdiction that none of your financial institutions locally are on that list, and you don't feel comfortable, you're doing well, and you don't feel comfortable putting all your eggs in that one basket, in that financial institution. So you want to diversify a bit. You can do that if you become a resident, or if you have some sort of access to the jurisdiction in which you do want to bank. So if it is you want to enjoy banking in Singapore, consider getting residency in Singapore. If you want to do it in Europe as well, European bank, consider getting a European residence. And it's not as hard as you think it is, because there's so many programs available right now that make that possible. So I'm sorry for being a bit long-winded, but I do see them inextricably linked. Yes, you want to bank in a certain jurisdiction. Yes, you want to incorporate in a jurisdiction. Look and see whether getting residence would make that process easier. And if so, consider the implications tax-wise and otherwise, and, you know, plant that flag, bring that into your portfolio. So it's my point is, it's another asset class. You know, people talk about, well, I have a little bit of crypto, I have a little bit of precious metals, I have cash, I have treasuries, I have whatever. What about your residence and citizenship? You know, where are you? So I think it's just part of that conversation. Sorry, somebody has been writing questions in the chat, which is fine. If you don't want to talk, you can just type in the chat box below. How does being a US citizen affect my tax burden if I moved abroad and obtain a second passport? I think, you know, I don't know if you were here for the beginning of the conversation. It's that momentum is already happening. You know, people, you know, the conversation around Cal exits is real. People leaving California, not just Elon Musk, but regular people, regular business owners, regular investors who, I mean, for whatever reason, including the looming potential wealth tax, have decided that Texas or Tennessee is a better option, or people leaving New York for Florida. So that's really happening. So you leave Texas, California, and you may save, because the highest state tax, marginal tax rate there is what, 13%. So you save 13%, 1-3. But if you leave the US, you just physically leave the US, there's a foreign earned income exclusion, there's a housing deduction. So potentially the first 150K of your earned income like that is sheltered from federal tax. So, you know, for some people, that is a lot of money that can be used. That money that's saved in tax can be used to invest. You can buy more crypto, you can buy more Tesla, you can invest in Singtel, or or whatever else. You have more investable assets if you were to make those types of decisions. Now, there are people who belong to countries or who are citizens of countries where that's not allowed. I mean, another residence is no problem, but having a second passport is. So I guess you just need to be conscious of that. For example, if you're Singaporean, or if you're Indonesian, or if you most of the Asian countries don't really allow second passports, but definitely residencies. So you just need to be sensitive to that. But obviously, most of my clients, not obviously, but most of my clients are US exposed. And that is definitely part of their strategy. By living outside of the US, they save a lot in taxes, which they can reinvest otherwise. Yes, you would pay a follow-up question from that. Would I still need to pay tax on your income? Yes. The United States is famously that one jurisdiction where you will be taxed on your worldwide income, regardless of where you reside. So in that way, the IRS sees no difference between Seattle and Singapore, but the tax code gives you tax breaks as a US person outside of the US that US persons inside the US can't get. So like the Section 911 foreign income exclusion that I mentioned. Now, not to ignore those with other passports, that I mean, the US has been stymied with that reputation for worldwide tax, but other jurisdictions are catching up. So for example, Canada, the CRA has the position that if you are traveling outside of Canada as a Canadian, that's okay. But essentially, if you are not properly tax resident in another jurisdiction, fallback rules might apply, and you would be deemed to still be resident in Canada, even though you haven't been back in Canada for years and you're just moving around and investing and doing whatever. Same with the UK, and same with Australia, same with New Zealand. These fallback rules are becoming more and more aggressive, and some other European countries have taken it a step further. So, for example, if you have Swedish or Spain or whatever, even though you're outside and you're a tax resident somewhere else, for X number of years, it takes X number of years to stop being a tax resident with that European country. And then some other jurisdictions like Italy will say you have an Italian passport, you're outside, even if you are resident somewhere else, if you're in a tax haven. So I have clients on MM2H, my Malaysia second home. They're living in Malaysia, and obviously if you're in MM2H and you're not in, you don't have Malaysia source income, which they don't, you're investors, you have money from overseas. You're not paying taxes on it. Italy will say, well, hold on, you're in a tax-free situation. You are deemed to still be tax resident in Italy, even though you haven't been back for decades. So the US may have started it, as with many things in the tax space, but other countries are catching up. So it is something to be conscious of and speak with whoever advisor you use before you make that kind of step. Right. Okay, sorry, somebody just commented on parts of Africa. So yeah, Africa, historically, people have been looking at parts of, Southeast Asia for that lifestyle. So being in Bali, famously, being in whatever, in Malaysia or Singapore, whatever, and sitting back. And because they can create a situation, especially in Singapore, Malaysia, where you're taxed on, it's territorial tax. So your investments outside are not subject to tax, so you can live well. But there are jurisdictions in Africa that would allow that. And I have clients that are people that are actively, and you can see it on YouTube, it's quite, there are some popular YouTubers who are exploring Africa from an investment perspective. Ghana, Rwanda, of course, Rwanda's all the way up there in terms of the infrastructure and ease of, doing business, non-corruption, clean, safe. But also Ghana, Mauritius, I've been to Mauritius myself, healthy, offshore landscape, for those who want to invest into Africa. Mauritius is a great jump off point, as is the United Arab Emirates. So yeah, Africa, I agree, Africa is definitely up and coming. Any other comments, questions?
Hey, Darren.
Yep.
Is buying a property in another country, will that allow you to open up an account at financial institutions? Something as simple as that, if potentially getting residency is more difficult.
Well, yeah, I guess there are varying degrees of difficulty, but every country on earth has has some, however they phrase it, however they brand it, some scheme or some program where you can hand over cash and you can get residency. At least every country, name the country, and I'll tell you that it has one. Of course, I'm excluding North Korea, Cuba, that kind of stuff, Iraq, Iran, but basically it's normal. So depending on the jurisdiction, part of the residency by investment may involve, or citizenship by investment may involve buying property. So for example, the 5 Caribbean islands that offer citizenship by investment, which will be Antigua, St. Kitts, Dominica, St. Lucia, St. Vincent, Grenada. I think a double count. So they're all, as far as I am aware, they have a real estate portion. To get that citizenship, in terms of residency, you can get residency by investing in real estate in many European countries like Portugal, Greece, Cyprus, Eastern Europe, in Montenegro, and so on and so forth. So my point is that the investment in real estate can also come with fringe benefits such as legal residency. But having said that, if you're not really interested, it's not part of your plan to get residency in a jurisdiction, you can just, depending on the laws, of course, you can invest in real estate. And by having some connection to the jurisdiction, it makes it easier to have that conversation with the bank to open a bank account, because they always ask, well, so why are you here if you're not citizen or resident? Why do you want to open an account with our bank? And if it is that you have investment property and therefore you have local source income, then it just it makes sense to have a bank account. So that it makes a conversation easier. Of course, some jurisdictions are easier than others because like in Southeast Asia, the only country that I'm aware of that allows you to buy landed property would be Malaysia, and everywhere else you just get air rights. You really can't get into landed property like you can in Malaysia, but it's easier, of course, in Latin America, maybe Africa, Europe, and so on and so forth.
Okay, thank you.
Are there also breaks for if you want to start a small business somewhere? Is that another way of getting residency or no?
Absolutely. So that's the basis for my residency in Singapore. So I started a company, and that company got me residence there. And you can use that same vehicle for many countries. I think everyone is open for business. And that is a common way, aside from just investment, opening a company. So if it is that you already are a business owner, then incorporating in the jurisdiction in which you want to plant a flag is definitely a way in. I'm thinking most countries, including Europe, would, of course, the thresholds would be, in terms of the amount of capital that you need to provide, can be pretty high. Like I think in Indonesia, you need to type like $500,000, depending on what you want to do. So the capital injection required in opening that business would vary, but most countries do allow residency for business owners and people starting businesses, especially if they're going to bring jobs in. Definitely. Any other questions, comments?
I don't have any, but this is absolutely great information. Thanks, Darren.
Yeah, and you know, I know in the WhatsApp group is quite diverse, but of course there are many people of color, and many of us are either immigrants or the children of immigrants. So I was born in London because my parents wanted a better life, and they left Trinidad, and they ended up they thought the UK would give them that opportunity. And then later on, my dad moved to the US, and that's how the US opened up as an opportunity for our family as well. So, in a way, it's in our DNA, the idea of moving from one jurisdiction to another to create and to preserve wealth. It's not unfamiliar to us. So, in that sense, this is just a natural continuation of that journey. So yes, we have done okay in the UK or France or Canada or the US, but when you look at those above us, so like the first slide I have was Warren Buffett. You know, he just made that investment. When was it, last year, in two or three of the largest trading houses in Japan. One of the co-founders of Google, he got his Cyprus citizenship 2 years ago. New Zealand, there've been so many articles online with how New Zealand has been doing well, attracting tech entrepreneurs and billionaires who want a second residence for other than Silicon Valley, other than California. So they have a nice ranch or setup in New Zealand. So this is something that, in terms of your personal financial journey, it's always been there. It's always been the next step. It's always been the next step. So as we are at that stage where we are doing okay, you know, 6-7 figures, then it's natural to start thinking in that way as well. How can I hedge against what's happening? We know that history repeats itself. The governments aren't hiding their thought process. They need to plug their balance sheets. They need to deal with their deficits. They will raise taxes. President Biden hasn't hit that. The Chancellor of the Exchequer in the UK hasn't hit. You know, it's not a secret. It's happening. The budget, these things are happening. This is real. So, you know, the tax code is meant, there's a reason why Warren Buffett has always, you know, has famously said that his marginal tax rate is lower than his secretary's. That's because the tax code is deliberately written to favor investors over employees. And that's not just the domestic tax code, but those are the international tax rules. When you read a tax treaty, you actually sit and you read and you go through the different paragraphs of a model tax treaty. It's written to give more tax benefits to people earning investment income than to people earning earned income. So they're exchanging time for money, they're exchanging services for money. It's just the way it is. It's not a conspiracy theory. It is the way the rules are. So I think it's really unfortunate if we were not to continue that natural step in our evolutionary process and not leverage the same tax rules that are written for everybody's benefit, and you leave money on the table, because that's essentially what you're doing. If it is that you are at a stage, because I know some people are still at a stage where they are dependent, they're location bound. They must go to this office every day and so on and so forth. But if you are at a stage where you're running your business, like my clients are, or you are reliant on investments, then you are doing yourself and you're doing your family a disservice if you are not leveraging the rules to you and your family's advantage. And that means legally considering other residencies and citizenships. And the easiest one would be where our parents came from. At the very least, for those who are immigrants, not just for those of the African diaspora, but you know, when I talk to my clients in the US and they want to leave the US, so, oh, your grandparents are from Italy or from Ireland, where's your Irish passport? Where's your Italian passport? All those European countries do have those rules. You can legally, you can prove that one of your grandparents was Irish, British, Italian, French, whatever, you will get a passport. To my Jewish clients, why don't you have an Israeli passport? You're legally entitled to one. Or based on the rules, because as I don't know how much of history class you paid attention to, around the time when Christopher Columbus got his first Series A round from the King and Queen of Spain to go on his startup venture to the United States, that coincided in 1490s with the ejection of Jews from Spain and Portugal. So I have clients right now who were able, based on certain rules and laws in Spain and Portugal, to reclaim the Portuguese and their Spanish citizenship because their ancestors were kicked out 500 years ago. And it's all legal. You know, everybody's taking advantage of these, and you're leaving money on the table if you are not, and you're leaving yourself exposed if you are not. So, any other questions or comments? No? Okay, that's all right. So again, depending on the stage of your journey you're at, you may be in the wealth creation mode, but once you get to the stage where you're sitting on a nest egg, and you know you begin to think with a different perspective, and you think about preserving your wealth and making sure that you are able to not let it be eroded by, obviously not inflation, but by, you know, political risk, taxes, foreign exchange, and, you know, unexpected foreign exchange movements or whatever. So you want to diversify yourself. You want to diversify your lifestyle. And that would mean, especially right now where it's probable that the lockdowns or the difficulties in movement will continue into the future, that you equip yourself with a portfolio of residences and passports, and that's all. Again, there's a whole wealth of stuff online, so do check it out. YouTube, just a multitude of websites that will, you know, help you make whatever the choices are. But the obvious ones will be, look within your family. Where your parents from? Where your grandparents from? And that's where the journey begins. That's where the journey begins. There are fantastic jurisdictions out there. Before we came on live with this, you know, Kishi and I were talking about the United Arab Emirates. It's one of the few jurisdictions in the world that right now is open to non-essential travel. So you can come in without the hurdles that entering other jurisdictions now entail. And it is tax-free. It's tax-free, so income is tax-free. Capital gains are tax-free. There's no inheritance tax, there's no gift taxes, 100% legit tax-free. So, you know, most popularly of the 7 Emirates would be Dubai. But, you know, if you're not into that hustle and bustle, that city life like Singapore, Dubai, there are other Emirates, Abu Dhabi, Fujairah, Sharjah, which offer that more laid back. You can go hiking, you know, just beach or whatever it is you're into, a more laid back lifestyle. So there are Emirates, other up and coming jurisdictions, at least within my client portfolio. Barbados, clients from South Africa, from the US, from the UK, heading to Barbados right now. They have a welcome visa, but not just Barbados. Barbados is really good at marketing itself, but Dominica has something similar. I mean, this is residence, not citizenship. We spoke about citizenship. Bermuda has something as well. So basically, Barbados welcomes you. It's called a welcome visa. You're there for 1 year, and you're there tax-free for 1 year as well. And you can run your business, work remotely, whatever the case may be. Other popular jurisdictions would be Portugal. The D2, D7 visas into Portugal, where you can go in and your investment income is subject to, it's not tax-free because it's Europe, right? So Europe is pretty aggressive, but you have a modified and attractive tax regime in the non-habitual residence, as you do in the UK, where you can be res non-dom. Ireland has something as well. Spain has something as well, the Beckham law. named after a soccer player, David Beckham. So there are jurisdictions where you can enjoy that quality of life in a tax efficient, relatively situation, and you can start creating your portfolios as well. And now, where healthcare is, of course, a concern, you're looking at jurisdictions that do have advanced infrastructure in that space as well, and at cost-effective prices. So, yeah. Okay. Thank you very much. I appreciate it. I appreciate the conversation. Again, I know for some of you, this is maybe still early, but take the seed, plant it, and as things go well for you, you now have an extra tool, or skill set or tools that you can draw upon to help you achieve whatever your personal goals may be. Have a good night. Have a good morning, and I'll see you back in the WhatsApp group.
Thank you very much, Darren.
Okay, bye-bye.
Bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.